Hello everybody, I am Sonam Srivastava and in today's video I want to introduce to you one of the products of Right Research which is closest to my heart, which is the Right Research Portfolio Management Service or PMS. So while Right Research is a 6.5-year-old company, our PMS is now 2.5 years old, and in these 2.5 years we have learned a lot about framework and we are so excited about the opportunities that we have as a PMS in doing the best for our clients. Our PMS is also unique in the market. It has some very distinct USPs that you'll find very rarely in the Indian scenario. First thing, that it is a quantitative strategy. What's a quantitative strategy? It is a data-driven framework. So we have built frameworks and systems and algorithms that look at everything from risks, returns, fundamentals, technicals, market conditions, and take a calculated allocation to different stocks to do the best for the client's portfolio. Secondly, we cover a whole set of data points. It's not just about looking at the price movements. We also look at what's changing in the stock fundamentally. What are the analysts saying about it? How is the sentiment changing? We also look at the macroeconomics and what they are telling about the shifting in sectors and factors going on in the future. And we have built a very good track record over the last 2.5 years where you have few instances where the strategy has really outperformed the market and few instances where we have had opportunities to learn as well. You also have a 6.5 years of history of Right Research being on the small case platform where we have navigated some big risk events very expertly. We'll also talk to you about the philosophy that is ingrained in our PMS, which will help you evaluate our strategies. And finally, I'll talk about our team and all the drive that the team brings in and all the expertise that the team brings in building this product. So let's start by talking about our key differentiator, which is being quantitative. So what is quant investing? Quant investing means that you build a framework that follows data to navigate all the nuances of the market, be it high risk, be it a bull market. How do you allocate and how do you shift your strategy? What this does is it removes emotions and brings in a discipline, right? So with every event and with everything happening in the market, you don't have to react. As investors, we all want to react. Oh, the market is down 2% today, let's go sell something. Quantitative strategy does not react. It has learned from history and it follows a disciplined approach, which is crucial for any investor. Secondly, a quant strategy can be consistent across cycles. What that means is that in a bull market, a quant strategy is capable of picking the winners, but also in a narrow market, right? Let's say a bearish or a sideways phase where not everything is working, but a selective set of stocks are sort of giving you performance. A quant strategy might be the best suited of picking those opportunities in those markets. Thirdly, the whole framework is repeatable. What that means is that the entries, exit, rebalances and the frequency don't depend on anybody's mood. They follow a framework, right? The same framework that we repeat time on time. So that removes the bias that can come in investing in this whole process. Finally, it is scalable and measurable. Because we have access to a wide set of stock and wide set of data points, we can create a whole different set of portfolios and also we can see them scale. Finally, it's also very measurable. So instead of every stock pick or every stock exit that we take has a very clear rationale behind it that you can see and understand why it might have been the time to exit or to enter this particular stock. At Right Research, we believe that quant investing is going to be the future of investing in India. Indian markets are getting faster and noisier, which means that you can see more and more stocks entering the primary market, the volumes increasing, right? And the noise or the sectoral shifts and volatility also increasing, which is where you really need a quant system which can look at these wide set of data points and adapt along with the change in data. Secondly, there's a computing edge that comes with quant systems. You can do stronger testing, monitoring and faster learning from the markets. So while previously people thought about quant strategy as a nice to have thing in their portfolio along with their other investors, that is shifting and quant investing is actually becoming the default for many investors as well as institutions. A quant system does not mean that AI is coming and operating your portfolio. It is a mix of human as well as technological judgment. So while we build this framework by looking at the data and a lot of analysis, there's always a human oversight in trying to make sure that our systems are following along as expected, and if any change that is happening in the market which might not be visible to the models, we are adapting them for it. Now, what makes right research different from other quants or other PMSs in the market? Our mission statement is to unravel the market with data and algorithms to generate wealth for everybody. We have an edge because our quant strategies are proven. It's been more than 6.5 years where these strategies have seen periods of very strong growth as well as periods of risk, and they have navigated them expertly. And we have a lot of confidence in our quant strategies giving accelerated long-term growth with calculated sort of risk. The second differentiating factor that Right Research has is in terms of our adaptability. Regime modeling or understanding how the market dynamics themselves would change is a very important thing that we look at. We look at a gauge of fear and greed in the market. We look at a gauge of, let's say, liquidity, valuations, the data coming out from the global macros, and we use these key triggers to adapt our factor allocation to invest into the right factors at the right time. Thirdly, we are a pure quant fund, right? We really believe in our systems, and we bring in trust and scalability through the systematic process. So, we follow our rule-based engine, and we do not intervene in its working based on any human emotions. Apart from the quantitative benefits, as a team also, you also get a lot of market access and learning with us. We have a great set of RMs who are working with clients, sort of helping them in understanding their portfolios, understanding what's happening in the market. We do very regular webinars on YouTube, and even with our clients where we explain in depth. I go in depth about what's happening inside our strategy, so you get that insight. And we're happy to help people who might themselves start having some fear or change in opinions in the market. We have very meaningful communication and guidance flow coming out with our frameworks. There are regular newsletters, webinars, and client connects to build this community with our clients. So let me give you a brief overview of the investing philosophy that Right Research follows. The core of our philosophy might be three things. One is looking at factor investing, which I'll explain to you. Second is trying to understand the market regimes. And third is using AI or data science process to really optimize what we do. So what is factor investing? So, I'll give you an example, right? When you see a changing weather pattern, or when you see the rise in pollution, right? You try to understand what are the factors that are leading to that. Similarly, factors in investing, what they mean is that what are the factors that are leading to a growth of a particular stock. So typically what you would see is, okay, valuation, anything that has become very cheap tends to attract demand and then starts rising. Secondly, a company that's very high quality, very consistently giving you good margins, good return on equity, that becomes attractive. A company that is growing fast, people tend to like those companies because the company has been doing capex and growing fast. Then there are factors like beta of the particular stock, or the size, which means it's a large, mid, or small cap. That there's a higher demand for small cap because of the size, and many other such factors that help you define a stock's characteristic. So unlike a few investors who might only look at its evaluation, or a few investors who only look at quality, we try to look at all of these factors together, and we try to understand that in any market condition, which particular factor could do well. And that's where the second key point, which is the regime shift, comes into play. So what is regime shift? So I'll give you an example. Imagine the market after COVID, right? 2020, 21, where the market was just rising and rising. That was a bull market, right? Even going back to 2023, you saw a very big bull market. But think about 2025, that was not a bull market, that was a bearish market. And see, in a bull market, investing into a lot of small caps, your high growth segments would have really worked for you. But in a bearish market in 2025, you would have seen, only large caps worked, or let's say only the safety stocks worked. So what that clearly means is that the factors that will work in different types of markets are different. And that's where you really need to understand, first of all, what market scenario are you in, and then take a call on which factors to allocate to. And that is one of the key things that we do. Thirdly, we use machine learning models, optimization, and AI in different parts of our portfolio construction. For example, a set of stocks after being selected due to the factors, how much weight to assign to them. We use optimization methods to do that allocation, looking at the risk, looking at the rewards, looking at the churn that we want to have in the portfolio. We dynamically sometimes deallocate to gold or cash when we see risk, and we also hedge in certain scenarios. We use AI to adapt not just with the market regimes but also with the regimes that could favor small and mid cap versus large cap. And then we look at a whole key set of factors that give us not just information about the future performance of the stock but also identifying those stocks which could have extremely high risk. For example, avoiding very illiquid stocks in a volatile market, or avoiding highly valued stock when the markets have been volatile. Our strategy might be one of the best strategies to allocate to in this scenario, right, in the current market, because the markets have become narrow. There is only a limited set of stocks that are working, and strategies like ours are best adaptable and best suited to pick those allocations. We also do some personalization for our clients. For example, if you look at our small cases, we have a whole set of different themes also. For example, innovation, new India, large caps, etc. And even for our PMS investors, as and when needed, we can do some customization for a larger ticket size. Finally, through our conversation with our investors, we have realized that section of people, while they're happy to allocate to us for the PMS, they also need some guidance on their mutual fund portfolio. And if you wanted to actually give your mutual fund portfolio to us to manage within the PMS, we are also doing that for a few investors. Now let me talk about a few case studies that we have seen in our 6.5 years give us conviction over our portfolios. The first case study is obviously the performance, right? So the strategies that we have offered for the last 6.5 years have been able to compound at a much higher rate in the market. Even the PMS right now, aggregate returns are close to 55% in 2.5 years. We are beating the benchmark by a margin in our factor strategy. But it's not just about performance, it is about risk management. And there are a couple of instances that are a great example of us doing good risk management. One would be the COVID crisis. We started Right Research in 2019 and then COVID hit. And when the COVID-led crash happened, our strategies were sitting on some gold and cash, which led to us not correcting as much as the market. So that was one of the great case studies in risk management that we had by following a purely systematic quantitative framework. Secondly, I think very recently in 2024 around the Indian elections, right, there was a big volatile event. So our strategy at that point in time were hedged. We were hedged in comparison to the market, so we did not see that big fall that happened in the overall market, and that sort of worked in favor of us. Our strategies at any given point in time, you would see that you have some of the leading winners that are there in the market in your portfolios. You'll also see that it's very diversified across sectors. It adapts, right? So if you see that there's a shift happening between defensives outperforming to industrials outperforming, you'll see that our portfolios adapt with that automatically, and that has come out in the performance. I think if you look at the aggregate performance of the PMS, we have beat many benchmarks in these 2.5 years, right? From, let's say, the market benchmarks, the BSE 500, even momentum indices, many large and well-known active PMSs and small and mid-cap funds, and even you'll see some difference between a PMS performance as well as small case. All the numbers and comparison are very readily available with my sales team, and you can go and talk to them and they'll present it to you. You'll also find some of this data on our website. So many of the more mature investors who are sort of coming and looking at Right Research are not just driven by the trend and the social media buzz around us, right? They want to know what is the credibility that your team has. So right now we run with a 20 plus member team with experts in quant, data analysis, technology, sales, marketing, customer support, etc. It's a very well organized team that works together for giving the clients the best experience and in fact giving the great performance to our clients, and also giving the best customer experience are the two guiding lights for our PMS. I'll talk a little bit about my team's qualification. So me myself, I am an IIT Kanpur graduate, and I've done my master's in financial engineering. Right now I have more than 15 years of experience in this field. Even before I started Right Research, I had more than 8 years of experience having worked at Edelweiss, HSBC, etc., and only in their quant functions. I've also written a lot of journal papers and research specifically in the use of AI in finance, and actually sort of serve as a faculty for the US based AI in Finance Institute. Like our research that is very scientific, that's how the process that we follow goes through. We're also very well organized as a team and very well structured and secure. Recently my team worked with Stanford Seed. We did a 1-year program where we really looked at our strategy, our culture, our frameworks, and we worked together all coming on the same page, put in so much effort in organizing ourselves as a team and finding that how important, first of all, giving clear benefit of our quant strategies to investors, but also giving them the best experiences. At Right Research, we are backed by Orias Ventures as a venture capital partner. We raised capital with them a few years ago, and we have been always profitable in this last 6 years, and we're well capitalized in delivering to our promises and our ambitious goals that we have for our company. We have advisors from Stanford, obviously, but also AI advisors like Dr. Mikel Alonso, who helps us in advisory around AI stuff. My quant team, again, I sort of lead it because I do come with a lot of experience, and we have right now around 3 other people who are working on some very interesting, data-driven analytical projects, from macroeconomics to understanding the factors and a bunch of things going around it. And I'm just amazed by the amount of innovation and drive that comes out from my team. Apart from them, I have a very good sales team sitting here in my office, which are all people, who work very hard in bringing the best experience to the client, trying to explain what we are doing in depth and answering all the clients' questions. We have operations and a lot of fund accounting that goes in. So we have people sitting out for that who work really hard, and you'll see that there are hardly any operational mishap that could happen.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.